All right, today we're diving into a pretty wild prediction. The idea that the entire crypto market is barreling towards a massive crisis, one that could go off as soon as 2026. So, let's break down how something like that could even happen.
So let's kick things off with this quote from our source because it really sets the stage. The claim isn't just for a dip in the market, it's a prediction of a collapse that's going to be, and I quote, more violent than the 2008 financial crisis. The stakes are incredibly high.
And get this, they're not just being vague about it, they're putting a specific year on it 2026. That's not some far off future warning. That's basically a 2-year countdown. So you have to ask, where does a prediction this bold actually come from?
Okay, so how on earth do you arrive at a forecast that dire? Well, the argument doesn't start with complicated charts or anything like that. It starts with the human cost, with the very real and honestly devastating stories of individual people. The source looked at over 200 individual crypto portfolios, and what they found? It's pretty chilling. A shocking 95% of them were in the red. Now, that's not just a few people having a bad run. The argument here is that this is a sign of a system that's just broken.
I mean, just listen to this. There's the story of an investor from Algeria. He is down $1 million. He had a coin that went up 3,000x, an absolutely life-changing amount of money, and he didn't sell. He just held on, thinking it would go even higher, and then, poof, it was all gone. And if you think that's bad, the story of an investor from Bahrain might be even worse. He's down $400,000. But here's the kicker. It wasn't even his money. He took out a huge loan from a bank to invest, and now all of that capital has just vanished. And this is the really tough part. We're not just talking about numbers on a screen. The consequences are life-shattering. We're talking about divorces, serious depression, people having to sell their homes, their cars, just to try and cover these massive debts. You hear these personal stories, and it just begs a much bigger question. Is this just a string of bad luck for these folks, or is the system itself fundamentally broken? Well, the source points to 4 core problems that are basically fueling these kinds of losses.
And it really all boils down to this one question, right? Why? Why do so many people, we're talking about 99% of investors apparently, why do they end up losing their money? What is it about this market that makes it so incredibly hard to actually win? According to the source, it comes down to 4 things. First, there are just way too many projects with zero actual value. Second, it's a world built on marketing and hype, not real substance. Third, it's a total Wild West with no meaningful regulation. And finally, the big exchange platforms have the power to manipulate the whole market.
Let's just start with the numbers. There are over 12 million registered cryptocurrencies. 12 million! The source claims that 99% of these are basically empty shells with no real tech or actual use case behind them.
And here's the trick. A lot of these projects just slap a fancy techie-sounding label on themselves. AI this or DeFi that, when in reality, it's just another meme coin in disguise. It's all marketing, and it's designed to pull in people who don't know any better. I love this analogy the source uses. It just hits the nail on the head. Investing in these projects is like buying a beautiful apartment off a blueprint. You see the map, you pay your money, but then you find out the developer never even started construction. You've bought a promise, not an actual asset. And that's only possible because of the second huge problem, the complete lack of regulation. In this space, a team can build up a ton of hype, raise millions of dollars from investors, and then just disappear. They can abandon the project, take the money, and face absolutely no consequences. And finally, you have the incredible power of the big exchanges, the platforms where everyone trades. Think about it. They see everything. Every buy order, every sell order, every stop loss. They have the data and the money to nudge prices just enough to trigger a wave of automatic selling, liquidations, and they can profit from the chaos they help create. Okay, so the crypto world clearly has its own internal problems. But how does that mess potentially spark a global crisis? How does it break out of its own little world and start affecting the entire economy? Well, the argument here is that we've seen this movie before. Think back to 2008. The spark back then was bad home mortgages. The prediction is that in 2026, the spark will be huge losses in crypto, and it'll set off a very similar chain reaction. And why could the ripple effect be so huge? because of the sheer scale we're talking about now. There are an estimated 500 million crypto investors around the world, 500 million people. This isn't some niche hobby anymore. A collapse here would be felt everywhere. So here's how the contagion could work. It's like a snowball rolling downhill. When millions of people suffer catastrophic losses in crypto, especially people who invested money they borrowed, they have to sell other things to cover their debt.
Please like and subscribe for more trading content, and then subscribe for more daily, weekly trading insights.